Hey everyone, welcome to a Ultimate FX weekly analysis. It's currently 9:30 p.m. where I am at the moment, and about 12 hours until market open. As usual, I'll be analysing our major currency pairs. I'll be looking at our safe haven currency indexes, be looking at gold and our global equities. I'll firstly be looking at what macroeconomic data is going to be released, along with any political speeches or central bank members' speeches, and understand how that can impact the market. Then we can go to the charts and we can have some potential trade ideas with the technical and fundamental confirms. Okay, so firstly, let's have a look at what's been released in the US this week. One thing we do have to keep in mind is daylight saving is going to be ending on Monday to start the week. So as it says here, the time will be pushed back an extra hour. So just keep in mind that of the new time changes, especially if you're the type of person like myself who actually relies on volume and certain exchange opens to base my trades off, because I know there's a lot more money, a lot more volume flowed into the market during those opens, mainly talking about London and NYSE. So firstly, on Tuesday for the US, we do have PPI, so producer price index, being released. Then we have consumer price index. So this is pretty much producer, so what the producers are paying for goods and services. Then you have CPI, which is our inflation numbers, being released on Wednesday. So very key thing to look at here, because as we do know, the Feds, they are scaling back their asset purchasing program. So they're scaling back by $15 billion each month for MBS and treasuries. So one thing that we have to keep in mind, that in order for the Fed to meet their mandate to continue scaling back, or even scaling back possibly further, and then potentially hiking rates, inflation is the key thing. Like obviously employment, but employment is pretty much where they want it to be. Like the only thing that they're very cautious of is just inflation at the moment. So if we can get inflation to lower numbers, and we can get retail sales positive and consumer confidence positive, consumer sentiment positive, we can see the Fed's getting really closer to their mandate in regards to inflation numbers. Okay, so then the week we do have the Michigan Consumer Sentiment Index, and we do have JOLTS job openings being released on Friday. So obviously we do want a high number in job openings, as it's shown that employers are looking to employ people, and then if they are looking for more people to employ, obviously that's going to help with the employment numbers. Okay, so but I mean, it's not like the job opening, it's not telling you how many people have been employed, it's just telling you how many job openings have been provided. And if you want to go into detail, you can actually read the report and find out which sectors are hiring, and what's changed month over month, and what they're forecasting in the coming fiscal months and fiscal quarters. So moving on to UK, we do have GDP and trade balance numbers on Thursday, but that's about it. So that'll be the key thing, and like for like retail sales on an annual basis. So yeah, so we're definitely going to see a bit of volatility when it comes to the sterling and UK equities. But if everything is still status quo, because I don't really see GDP contracting that much, or seeing a trade deficit. I don't really, honestly, I don't really see that happening across the UK, because they haven't really increased lockdowns or increased restrictions for that like at all. So to me, I think everything will still be status quo. I don't really have a reason or fundamental reason as to see why GDP has been contracting on a monthly basis, especially with PMI and ISM numbers still at their highs, roughly, and continuing to chug more to the upside, very, very much above those 50 levels. So moving on to Europe, we don't really have much coming out in Europe this week, just a bunch of meetings across the Eurogroup and ECB. So we do have the economic fin meeting and then we do have industrial production to end the week, but yeah, nothing too crazy. And we do have the zoo survey, economic sentiment. So realistically, these are just like economic forecasts across, across like I think it's like across like the top 20 or 30 economists, just having their overview and what they're forecasting based on their it's just their macroeconomic forecasts. So obviously we're not going to see like a massive spike. The only big issue that we have been seeing in Europe at the moment is just a surge in inflation at the moment. So obviously that's just due to the supply bottleneck, supply constraints that we're seeing around the world, which is mainly due to low employment because of COVID, okay? But I don't want to get into too much detail about that, but that's just the main gist. So obviously we're probably going to most likely see some inflation fears. They'll probably say we cannot provide any forward guidance in relation to inflation. Everything is uncertain. Obviously there is some risk to the upside, but we're uncertain to provide any sort of guidance. Like that's roughly all they're going to say. Like they can't, like they'll just stick to that script. Like obviously there's going to be some variables, but they'll just stick to that kind of agenda. So moving on to Japan, don't really have much coming out. We've got leading economic index and current account numbers, money supply numbers as well, and PPI numbers on Wednesday. So yeah, we just got reports coming out from Monday to Wednesday this week at Japan. Moving to Canada, don't really have much in Canada. All we got is Bank of Canada Governor Macklem speaking. He's probably going to be speaking, roughly, it'll probably be a bit of the speech will be just talking about, the economy overall, what he's forecasting, but probably just like reiterating the employment numbers from last Friday. But yeah, like nothing too major. So moving on to China and Australia, we do have trade balance numbers. So this will be very big. So yeah, we'll have a look at, the exports, and the overall product of and imports as well, and the overall production across the Chinese economy. So and then on Tuesday we do have new home sales in Australia and consumer confidence numbers. Wednesday we do have PPI and CPI numbers being released in China, and we do have employment numbers coming out in Australia along with consumer inflation expectations. Okay, yeah, so that'll be a very key thing just to watch out for on Monday, just the trade balance numbers and obviously the inflation numbers as well in China. So let's go back to the charts. Okay, as usual, we're on the 4 hour. Gotten rid of my key levels, so basically we're just going to start with a clean chart. So let me get my Epic pen. Let's fix this up. So overall, just to give you like a small debrief, so obviously after failing to break above these highs and breaking and retesting below these lows here at setting for 600, I was actually looking for like a retest here, which we actually did get, but we actually did pull back up here and then started to push to the downside. So the only reason why most of our risk currencies have been falling to the downside against the dollar is due to the FOMC meeting where the Feds have been scaling back on their asset purchase program. Okay, so obviously injecting less liquidity into the market, printing less dollars, which increases the demand and decreases the supply of US dollars. That's why we're seeing a bit of a pullback across our major currencies. Okay, and we've seen a lot more inflows into the dollar. Okay, so next thing, when I'm potentially mapping out any potential trades on the Australian dollar, right? So I'm seeing this little key level, approaching this little sensitive price level here, but honestly, not surprised that we actually did reject at these previous highs here. But what I'm anticipating, obviously, if we can break and retest below here, I want to take some continuation sells, and then I'm planning to take some safer sells once we actually start to break below 73,600, and we see Dixie rally up to those intraday highs. Okay. I'll quickly show you Dixie in a minute, but yeah, this is basically my trade ideas for now. If I'm taking any buys, I probably want to come back above here and go for some buys. Once you close above here, retest, I'm anticipating further buys, but honestly I don't really have a need to start going long on the Aussie, because to me, after having this strong bullish structure, strong push to the upside, come back up here, pull back here, pullback, like very small pullbacks, but then we start to exhaust at these highs here, roughly at 75,400, after failing to break here and getting that nice little closure below here at these previous candle body lows. You know, we actually did retest 74,600 and then push further to the downside. Okay, so for me, I'm only be taking buys once we actually break above here, retest these candle body closures here. Okay, but to me, once we close below these previous candle bodies and this sensitive price level here, I'm anticipating for more sales to the downside, and that's most likely going to happen if Dixie breaks above those yearly highs. So that's what I'm seeing on Aussie at the moment. Okay, I'll quickly go to dollar so you understand what I'm talking about. So roughly, we're currently at these heights here at around 94,500. Okay, so obviously, just to end the week, we did have good employment numbers, but it wasn't like, to me, it was just like it was just like, to me, this was just like more of a pullback, and more of an opportunity, and seeing price being pushed and more favorable demand, so more buyers can get back in. But with the current Fed sentiment, and if we do get good inflation numbers, we'll most likely start to chug to the upside. Okay, if we do follow the sentiment and follow the Fed's mandate, and we close above 520, like I want to see a high time frame candle body closure, like at least a 30-minute, like the bare minimum, for us to continue back up here and start to break above these highs at 94,630, which is what I've got. So to me, this was just like profit taken from buyers, and just a slight pullback. You know, after like the whole week, you know, just chucking to the downside. Just chucking to the downside on our risk currencies. Like, it does happen. I mean, it does happen that we can continue to chug to the downside, but one thing that I realized when trading the market is, like, Friday, it just loves to do a correction. Like, it's not 100%, like it's not every single time, but majority of the time it just loves to do a correction. Like, if we just had like a massive down week, there's a very good chance that we're just gonna start to push back up, okay, and see price, and then obviously continue the higher time frame trend. But yeah, it's just profit taking from the buyers just to end their week. It's just hedge funds, banks, institutions closing off their positions to end the week and getting ready for the next week. You know, getting ready to price in future macroeconomic data. So obviously, I wouldn't be surprised if we actually do pull back to 94,100. That's roughly at these at the previous order block high here, so I wouldn't be surprised if we do retest here. I don't really see us coming back below and retesting below 93,850, but to me, safer buys above 94,500. That's going to show me a lot of buy side liquidity and a lot more inflows into the US dollar for us to chug to the upside. Obviously, high risk once we get to 94,100. Very sensitive price level with these previous highs here, and roughly we got a lot of sensitive price levels. Okay, so we've got some liquidity levels at this area, roughly 0.100. So moving on to euro. Euro is like very messy at the moment. We did just have this strong pullback just to end the week on Friday. So let me clean up the charts. So honestly, I don't really have a need to start going long on the euro. The sentiment from the Feds. So what I'm anticipating, whoops. So roughly we got these lows here, okay? Got these lows here, okay? So I'm still anticipating, you know, shorts. So I'd like to get like a pullback to 115,800 for some medium risk shorts, take them down to these lows, and we just got to understand that there's going to be a lot of sell side liquidity, and I can definitely see us pushing down to 115 flat psychological price level, okay? And we do have to understand that roughly we got this price sensitivity at these previous candle body lows and these candle body lows here, so we just have to keep that in mind, especially because there's a very good chance that we can actually retest this previous order block low here, okay? And we've got another order block being formed in this little predefined range here, okay? But what I'm anticipating, you know, some medium risk shorts here, very high risk shorts, because I don't really have any fundamental bias to start going long on a euro, especially against the dollar. Obviously we can get a deeper pullback to roughly 116, 100. You know, that'll be my very high risk, high reward shorts for them to continue to the downside. Okay, so that is only if we fail to see any higher time frame candle bodies above 116, 100. That is a break to the upside. Go for some high risk shorts, medium risk shorts here, safer shorts here. Don't really have anticipation or any fundamental reason or even technical reasoning to start going long in the euro. So that's what I'm saying. That's what I'm saying for the euro this week. Now going back to sterling. So if you're on my Telegram chat, I was actually talking about buys here. Yeah, I know it was very high risk. If you don't believe me, you go on the Telegram chat just to see for yourself. I did get in a buy at like 270. 270 here. Was it 270? It was like, yeah, it was about 270. So it was just above the counter bodies, and I had about like a 12 pip stop just to cover my ass, you know, just to let it breathe. And you know, just solid rejections because 10 to week, like to me, it was just like a deeper pullback. It was a very high risk, high reward position, but yeah, it was just based off of these previous 4-hour lows, and I knew that it was most likely going to be filled and have minimal drawdown, or just get flat, or just hit my stop loss like instantly. And you know, that's why it's very important just to pay attention to counter bodies. Anyways, so. You know, it was a very good position and played out well. And I'm closing a position out at I think it's like 600. Yeah, I'm not closing a position at 600 just because of the employment numbers. But yeah, I didn't, you know, catch this whole move here. It's unfortunate, but all I can do now is adapt to any trade ideas. So moving on to GU. When analyzing, you know, the current price action, obviously it's very bearish. You know, after failing to break above these highs here, getting this impulsive move to the downside, failing to react at these previous order block highs, even these previous order block lows. Like, there wasn't much price sensitivity. It's just a straight impulsive move down. This was mainly due to the Bank of England delaying their rate hikes. Okay, so obviously, the start of the month, Bank of England said that they were anticipating rate hikes by November's MPC meeting, so the interest rate decision. That didn't happen. It was just a massive curveball, just like the RBA, and then just like the Federal Reserve. So, you know, they love to fake people out. You know, whatever they say, like it's whenever the central bank members speak. When it's too good to be true, it's usually too good to be true. You know, they were talking about hiking rates, and we saw the equity markets just take a bit of a dip. But yeah, it was just too good to be true. Then we just saw GJ just have this massive rally, like huge rally. So yeah, that was the start of last month. Sorry. But anyways, that's all been faded out, especially with dollar gaining a bit more traction. So. In regards to GU at the moment, the current price action that I'm seeing, I don't really want to take any more buys on GU. I am in a risk-off sentiment, so, you know, long in the dollar. So really, I'm looking at this like sensitive price level at the moment. If we actually do start to chug to the upside, it'd just be at the open up this bearish 4-hour impulsive candle. Okay, but to me, of course, you know, we can definitely adapt to buys once you break and retest above here, but that's not the current trend. Okay, like when I'm looking at price action right here, okay, like when I'm looking at price action right here, like it's all bearish. Like, to me, to start going picking buys, like here, very high risk position. I know that it's a very high risk position, but it comes with very high rewards. So obviously I don't really want to start picking, you know, bottoms and whatnot, but if we can break and retest above here, I can definitely see us pull back to this previous order block lows, possibly even coming back up to like honestly, I wouldn't be surprised if we even come back up to 136 flat. Psychological price level, but I'm in a bearish bias, obviously with the current Fed sentiment. We can start to retest if we fail to break above and snap back into this range. I'm taking some medium risk shorts to the downside, and we can continue those shorts once we actually break and retest below 135 flat. Okay, and safer sells, because you gotta understand there's a lot of sell side liquidity here. Okay, so there's a lot of sell stops just resting below here. Then we can push further to the downside. Like I said, current sentiment. I've said this for every chart so far, but I don't really have a reason to start longing sterling. Okay, especially with rate hikes being postponed to probably next year. So moving on, GJ is very similar. Just keep in mind that we're pretty much approaching where we started to push to the upside. So when we started to push to the upside, obviously these were the intraday highs at the time, and then we were just like a strong rally. Okay, so I probably want to I really want to see how we do react. At this price level here. Okay, if we do get some nice counterbody closures here below, I'm really liking sells to at least 152 flat. So that's roughly a 80 pip move. Okay, 80 pip move, give or take. And then we can push further to the downside and adapt to further sells. But that is only going to happen if we see some, hawkish sentiment from Japan, and a more, I guess, for the Prime Minister of Japan or any political speakers and the Bank of Japan, to say the economy is flourishing. And potentially, scaling back on their purchasing program and potentially hiking rates sooner than later. Yeah, if we do see some hawkish comments from the Bank of Japan and more dovish comments from the Bank of England, yeah, we can definitely adapt to some GJ shorts. Okay, but just understand that this is a very sensitive price level. Okay, roughly at these previous higher time frame order block highs, and then continuing to the downside. Okay. But obviously, if we fail to break and retest below here and close above here, get a nice high time frame counterbody closure above here, I do want to take some buys to the upside to potentially here. But obviously, I don't see enough buy side liquidity or buy side momentum for us to start calling buys and targeting, roughly like a 150 pip range. I don't really see that happening as of now. So really just adapting to shorts. Next thing, USDCAD. USDCAD is steadily chugging to the upside. We can see this higher time frame bearish channel being formed. I really want to see if we can actually break and retest above 125 flat. To me, once we break and retest above 125 flat, come above here, we can definitely target roughly these lows here, and we can go for like a 100 pip range to 126, just based on the Fed sentiment. And obviously, if we do see oil start to pull back, we can definitely go for some USDCAD longs. Okay, don't really have a need to go short based on the current market structure. Like, there's not enough sell side liquidity for us to push further to the downside. Right, so moving on, Dixie, like I was saying before. Once we actually do close above here, we will chug to the upside and we'll see our risk currency starts to fall further. But I'm really seeing us to reject here, us to pull back down here, then continue to the upside and chug away. But yeah, and this is a very sensitive price level, these previous highs here, and then we get these highs here and previous lows here as well. Okay. So that's what I'm seeing at the moment. I don't really see us pulling back up here, or pulling back down here and then pushing further to the upside. Obviously, these will be a very high risk buys, but like I was saying, I just don't think the pullback is going to be that deep. Definitely we can pull back to 94.100, but to pull back to 93.800 is a possibility, but it's very optimistic. So moving on. Moving on to the yen. So yen's currently at these lows here. Obviously, if we can break and retest above 88.20, obviously this only moves. This only moves for our NY. So So if we can break and retest above 88, we can adapt to some more GJ shorts or some yen longs, and see more safe havens gain a bit more appreciation. So yeah, like you need to break and retest above here, because at the moment we're just in this high time frame order block. Okay, but very clear and strong push to the upside once you start to break and retest and continue back up. Okay. Next thing is gold. Yeah, so gold, to me, in my opinion, the employment numbers on Friday was like a massive whipsaw. Like, like the employment numbers were, you know, the Fed's expectations, but to me, you know, we saw more outflows. Like, to me, it was just rejecting these weekly highs, yearly highs, and we're just seeing a bit of a pullback just to start, you know, the current week. So yeah, that's what we did see gold start to push to the upside. But honestly, with gold, if I can get like a nice retest at 1807, hell, 1807, I'm really liking some continuation buys. Okay, so if we can get a retest at 1807 and then continue back bullish, won't be surprised if we actually do pull back to, I think that's 1802 or 1801. I'm going to say 1802. If we can get a pullback to 1802, we can go in for some medium risk buys. Okay, obviously safer buys once we actually start to break and retest above the current highs at the moment. But then when I'm looking here as well, yeah, like honestly, that'll be a very good pullback area just with these previous order block lows. And honestly, I want to stay above 1821. If we can stay above 1821, because I need to go further back just to identify liquidity levels. Okay, if we can stay above 1821, I am going to be focusing on a more short-term bullish bias. Okay, but overall in the long term, I'm doing that probably next year. It's bearish. Like, to me, overall, if we're just looking at the current structure, okay. Current structure, like, it's bearish. Like, overall, like, it's bearish. Anyone that says bullish, they're tripping. But yeah, so like overall it's bearish. You know, ideally you need to break above these highs here. Okay, you need to break above, what's that, 1833? Yeah, I mean, this is a make or break level. Like, this is like a resistance. Okay, so obviously there's gonna be a lot of buy side liquidity up here, or, you know, a potential, because we are in a high time frame bearish structure. There's a very potential for some high risk shorts to be played out. Okay, and for us to push further to the downside, targeting these lows here. Anyways, that's I could do like a whole analysis on that, but I'm not. I don't really waste everyone's time here. So next thing we're looking at is Dow Jones. So Dow Jones it's just chugging to the upside. I am expecting a bit of a pullback just with the Fed sentiment, as we are getting closer to hiking rates and less money being pumped into the economy. So obviously there's a lot of buy side momentum, and I don't really have a need to go shorting the stock market. Not really now, and there's no few headlines. Anyway, so probably I'd like to get like a solid retest at, what's that, 35.9, roughly 35.890. If we can get a solid pullback here, I'll get some medium risk buys in here, or if we can actually get a candle body closure above these highs here, roughly about 36,400, we can continue to chug to the upside. Okay, so retest here and then continue back up. And then lastly, we'll just quickly have a look at our global equities. Global equities are overall bullish. Dow Jones all-time highs, NAS all-time highs. Obviously, this is still a strong pullback due to the due to the lockdowns by President Xi in China. Aussie is just doing a bit of a pull. Aussie is chugging further to the upside after breaking these intraday highs. Obviously, I mean, obviously there is a good opportunity for the ASX to continue to 76.42 as they are delaying rate hikes. Okay, and especially with the Australian economy pretty much coming out of lockdown, because they have hit 80% vaccination rates, we can definitely see the Australian GDP start to increase and see tourism start to increase. Okay, so yeah, that's one thing to keep in mind as well, because they are allowing international travel in Australia. Japan's currently at 29,700 roughly. It's just still chugging to the upside. German 30 still chugging to the upside. Like, overall equities are just still hot. Okay, very hot. So overall, we're still in a very optimistic state, but we do have to understand that there's been a lot more inflows into dollar as they're anticipating rate hikes. As they are anticipating, like the Federal Reserve is anticipating rate hikes by probably be the end of 2022 or start of 2023, so Q1, Q2. So there's been a weekly analysis. Trade ideas have been discussed. If you enjoyed the video, please feel free to like, share, and subscribe. Thanks.